Hey, what's going on, guys? Today I want to talk to you about three high growth stocks. No, definitely not any of those names. That are good for more than just a short squeeze. You're not going to see them on any Reddit or Wall Street Bets forums because they don't need to be on there. They're actually profitable and doing very well. Not just that, but the earnings and fundamentals of these companies actually matches the stock price. Don't get me wrong. I understand what Reddit is trying to do by bringing money back to the little guy and take away from the hedge funds, but a lot of people got burned on some of those trades, and you don't want to have to worry about waking up in the morning and all your money potentially being gone overnight. No, the stocks that I'm going to break down in this video have actually shown sustained growth over a long period of time. And just as a bonus, if you stick around to the end of the video, I'm going to throw in a fourth high growth name. So let's get into it. Oh, but before we do, please hit that like and subscribe button and make sure you smash that bell for notifications. That way it helps my channel continue to grow. And as my channel grows, I help your pockets grow. That's a win-win, right? Number one on the list, PayPal. Not only did the world leader in the digital payment space hit multiple all-time highs this year alone, but their heavy investment into cryptocurrency has lifted their earnings to another level. And it's only going to continue to skyrocket as crypto builds momentum over time. In a recent article from Investopedia.com, it says PayPal surges to all-time high on strong quarter. PayPal continued its long winning streak on Wednesday evening, posting a greater than expected profit of $1.08 per share on 23% revenue growth to $6.12 billion. Buyers took charge after the news, lifting the stock more than 6% to an all-time high above 265. A nod to cryptocurrencies marked the highlight of the bullish report, with the fintech juggernaut now allowing customers to use their crypto balances as funding sources at 29 million merchants. I mean, right now we're witnessing a public trend shift away from cash currency toward digital currency, and it's taking place right before our very eyes. People aren't using cash like that anymore. They're using Cash App. They're using Venmo. They're paying for things in stores with just their phone. It's safer, it's more convenient, and it's a hell of a lot easier to manage. I mean, I hardly even have cash in my wallet anymore. And when I do, I'm looking to just get rid of it. It's a nuisance. And when I get rid of it, I'm getting back change in return. It's just a lot messier. Luckily, I'm somebody who keeps his change in a bottle and stores it up for later to just, cash that out. But to the average person, they end up just losing the change. Nobody's going to hang on to 91 cents to walk into the next store to go make a purchase. That's just not how people are wired. But with digital assets, all your money is stored in that digital account. And if we witness this heavy trend taking place right now, what do you think it's going to be 1 year from now, 3 years from now, 5 years from now? It's going to honestly come to a point where cash might be dead. Okay, currently the stock has a price of $288.45. Over the last month, it's up 21%. Over the last 3 months, 48%. Over the last year, 138%. And over the last 5 years, PayPal is up a whopping 748%. And I don't even think I'm getting way ahead of myself with this next statement, but I feel like PayPal is going to reach $1,000 within 2 years, maybe even less. Mark my words, PayPal is going to reach $1,000 price target within 2 years or less. The way things are going, if it continues at this trajectory, yeah, definitely. Number two, fuel cell energy. With the Biden administration's pledge towards cleaner, eco-friendlier alternatives and the huge explosion in the demand for electric vehicles right now, fuel cell energy is the perfect stock to launch your portfolio into the future. It's up over 1,000% in the last year alone. And I have a feeling it's just getting started. And Fuel Cell Energy is basically a fuel cell power company. It designs, manufactures, operates, and services direct fuel cell power plants, a type of molten carbonate fuel cell that run on natural gas and biogas. Their power plants are not considered hydrogen fuel cells because their feedstock is not pure hydrogen, and the byproducts of electric generation include carbon dioxide. As one of the biggest publicly traded fuel cell manufacturers in the US, the company operates over 50 plants all over the world. And why fuel cells are important? Here's why. In the future, fuel cells could power our cars, with hydrogen replacing the petroleum fuel that is used in most vehicles today, aka electric vehicles. Unlike a typical battery, which eventually goes dead, a fuel cell continues to produce energy as long as fuel and oxygen are supplied. And just last month, General Motors, the US largest automaker since like 1931, announced that they're getting more heavily invested in the electric vehicle space. And with the need for electric vehicles comes the need for fuel cell batteries. And if the US largest automaker is getting into EVs, what do you think all the smaller automakers are going to be doing? They're going to be copying. Remember, people always imitate whoever's at the top. And if they're going to be imitating General Motors, that means they're going to be mass producing EVs. And if they're mass producing EVs, that means there's going to be a large demand for fuel cell batteries. And since they're one of the largest producers of these batteries, I mean, you can already see where this is going. Number 3, Virgin Galactic Holdings. Ticker symbol, SPACE. This is the first outer space stock to go public. And since its IPO date back in October of 2019, the stock is up 424%. It's up 146% over the last year, and in the last 1 month alone, it's up 117%. The stock trades for around $54, and the CEO is Richard Branson. Now, I don't know if you know anything about Richard Branson, but this is a billionaire who is absolutely obsessed with taking people to outer space, developing space travel, and one day forming civilizations in outer space. And back then in 2004, when he had these ideas, people thought he was a lunatic. Now, it's beginning to look like a reality. Now in 2020, Virgin Galactic changed CEOs. Richard Branson stepped down and they hired Michael Colglazier. And this is what he had to say. Michael Colglazier outlined his long-term goals for the space tourism venture on Thursday, saying he sees the company bringing in up to $1 billion in annual revenue per spaceport in the years ahead. He said the first chapter of Virgin Galactic has been to accomplish an incredibly difficult task, creating a spaceflight system that can fly humans to space. The next chapter of Virgin Galactic is to use this system to bring thousands and thousands of people to space and deliver our purpose of opening space to change the world for good. To reach this objective, we are embarking on a multi-year effort that will lead to flights not once a month or even once a week, but targets flying 400 flights per year per spaceport. He also went on to say, in order to now pivot to be able to supply the demand that we expect, we're going to have to ramp up manufacturing in that regard, but I think it will be on the order of a few motherships, many spaceships, and a rocket motor for every flight as we go. Given that each spacecraft can carry up to 6 passengers, UBS analyst Miles Walton highlighted in a note to investors that $1 billion in annual revenue and 400 flights per year implies a ticket price of about $400,000. The company previously sold about 600 tickets, reserved mostly at a price between $200,000 and $250,000 each. Virgin Galactic has not yet confirmed how much tickets will cost when sales reopen, but the company's leadership has indicated it expects to price tickets higher than before, thanks to significant demand. So we can see from the reports that there's already a list of people who have already paid for their tickets and are just waiting for ships to be up and running so they can go to outer space. Yes, the tickets are only exclusive to the rich. But if it's one thing we know about the rich, they like to do things that no one else can do. They love to be exclusive. So I expect those ticket orders to continue to be consistently filled out once all Virgin's ships are up and running. So to all the critics out there saying, why would I invest in Virgin Galactic if no flights are presently launching and the company's reporting nothing but losses every quarter? Well, I could take that same statement and flip it in reverse. If no flights are presently being launched and the company's reporting nothing but losses, yet the stock is still going through the roof, what do you think is going to happen once they get all their ships ready and start taking large ticket orders and actually begin to launch? The stock is going to skyrocket. You see what I did there? Skyrocket. Now, since you made it with me this far into the video, here's the 4th bonus stock that I told you I'd mention. Taiwan Semiconductor, the ticker TSM. Taiwan Semiconductor Manufacturing engages in the manufacture and sale of integrated circuits and wafer semiconductor devices. Its chips are used in personal computers and peripheral products, information applications, wired and wireless communication systems products, automotive and industrial equipment including consumer electronics such as digital video, compact disc player, digital television, game consoles, and digital cameras. In the last 5 years, the stock is up 513%. In the last year, 132%. The last 3 months, almost 51%. And in the last month, it's up 10%. Here's a key takeaway with TSM. Taiwan Semiconductor is one of Taiwan's biggest companies and one of the world's largest semiconductor companies. And let's scroll down right here to see who their largest customer is. Apple accounts for about 1/5 of TSMC's annual revenue, and North America is TSMC's largest market. Now, call me crazy, but if your number one client is only, I don't know, the most profitable company on earth, then I think you're doing pretty good for yourself. But it doesn't just stop with Apple. They have a list of other clients that include AMD, Apple I already mentioned, Broadcom, Marvell, MediaTek, Nvidia, and Qualcomm, as well as emerging companies such as Allwinner Technology, HiSilicon, Spectra 7, and Spreadtrum. It has a strong buy rating and even comes with a dividend yield of 1.25%. It's the only growth stock that I've mentioned in this video that includes a dividend. So if you're saying to yourself, why buy TSM when I can just buy Apple? Well, if you take a look at the last 5 years, TSM's stock price has actually grown higher than Apple's. And not just that, but with Apple being 1/5 of their business, they're getting all the good perks of Apple revenue, as well as all the revenue from the other list of clients that I mentioned earlier. All right, so that does it for this video. If you have any questions or you wanted to weigh in because you own any of these stocks, please do so in the comments down below. And remember, if you haven't already done so, be sure to like and subscribe. Thanks.